Good morning, everyone. Today is Tuesday, December the 18th. We're stepping into the morning where the Fed actually begins meeting and doing their thing. What we've had is a breach of the resistance zone. Still very bearish, right? Still very bearish, but flattening down here, depending on which system you use for inflection. You can clearly see that we've got some support action going here. So the fades, although they could be deep, look like they have a good shot of being bought. Early morning motion, we are triggering long action right above this 2569 area. I really like it above 2571.50. We want to see it clear that area and then hold the zone, and it should push us up into prior congestion. Potentially we have a run all the way up here. SPX spreads don't expire until tomorrow, and so they've got a fairly good whack of motion there. It's got about 51 points from edge to edge. So it could be all the way down at 2400. It could be all the way up at 2597. That looks like old support, new resistance, with a pit stop round at about 2587. So we'll be watching those edges. Same sort of thing going on here with the NQ. It broke out over this level, pressed up into the space, and now pulling back, holding the zone. What do we expect? Fading action on all these bounces at the first pass. They've got to come back, hold their edges, create higher lows, and firm up so that they can move and fill in some of the auction profile that they've been building over time past. Taking a look at the YM, we've got the same sort of thing, right? We've got positive divergence, but there's a tremendous amount of congestion and volume profile filling in that needs to occur in a very negative pressure event. Looks like about 23,911 needs to be that bounce zone, and the fade, again, could be quite deep. Lot more volume coming in over the last couple of days from a bearish perspective. During the day, that's when the most of this bearish motion has come. So we've got a lot of sellers in the mix. If we start punching out through these areas and those sellers can't push us back down, we could hold what our bounces should come into resistance. You know, I like to recommend just pick a side and then work the formations according to that side, and you'll be in good shape rather than going back and forth between long and short. But the better you are at trading, the easier it is to do that. So you just want to be careful. Oil had a really savage breakdown. This area at 48.16 or so is a big monthly zone. You can see price action trying to hold above this area. This is the breakout region. Pullbacks ought to hold 48.80. If they don't, we've got some ugly stuff ahead. We could really, I see 46 on the horizon if this doesn't hold, but it is breaking down for the first time in really quite some time. So we have to think about, wait a second, was I holding, breaking the trend by time and not price, and then I've fallen back into relative trend, or should I really legitimately pop back up into my resistance zone before fading? You know, depends which side of the trade that you're sitting on. Certainly, my thought is bounce actions should be more failure, but it is very, very steep and very extended, so you got to watch out for that. Gold, trying to break out of the top, but it is resistance just like the rest. Negative divergence. Should have a fade. As long as it holds 1245, it's going to present a bounce zone. So if you're looking for the sweet spot, hey, where's the best place to take this trade? I would say hang on. See if it can come into 1245. We know we're going to try to bounce in the market. And if the market bounces and this settles in, it should fade. Now, if the market doesn't bounce and it continues to sell off even more, then we're going to move up into 1260, 1263, 1265. All right, that is the futures in 5. Good luck trading today.